So, I bought a coffee company last October. Well, sort of. For $500, I became a partial owner of Blackout Coffee Company, a Florida-based roaster that makes some seriously good coffee and supports traditional American values. But I didn't write a check directly to the company or shake hands with the CEO in some fancy boardroom. Instead, I did it from my couch on a Saturday afternoon through a platform called StartEngine.com, and honestly, it was easier than ordering a pizza online. Here's why I did it. I've been a longtime supporter of Black Rifle Coffee Company, the military veteran-owned coffee brand that exploded into a massive operation. I watched them grow from a scrappy startup into a publicly traded company worth hundreds of millions of dollars, and the whole time I was thinking, man, I wish I could have gotten in on that early. Well, I missed the boat on that. But when I discovered Blackout Coffee, which in my opinion makes better coffee than Black Rifle and has the potential to grab a significant chunk of their market, I saw my chance. This time, I wasn't going to be on the sidelines watching someone else's American dream take off without me. So on October 7th, 2024 at 2:11 p.m. Pacific time, I invested $500.28 in Blackout Coffee through StartEngine's crowdfunding platform. With fees, I paid a total of $517.79. And just like that, I became a shareholder in a coffee company. But let's back up here. What the heck is StartEngine? How does the whole thing work? And should you even care? Because honestly, this could change how you think about investing early. StartEngine is what's called an equity crowdfunding platform. Think of it as Kickstarter of actual stock ownership. But instead of getting a t-shirt or early access to a product for your money, you get actual shares in real companies. StartEngine is registered with the SEC and operates under 3 different regulations. Regulation Crowdfunding, Title 3, Regulation A+, Title 4, and Regulation D. Translation, it's the real deal, not some sketchy internet scheme. The platform launched in June 2015 and has helped companies raise tens of millions of dollars from thousands of regular investors. We're talking about a legitimate, regulated way for everyday people to invest in private companies that used to be exclusively available to wealthy investors and venture capitalists. Here's how it works in practice. Companies that want to raise money create campaigns on StartEngine, kind of like a Kickstarter page, but with financial documents, business plans, and SEC-required disclosures. All the transactions must take place through SEC-registered intermediaries, and companies can raise up to $5 million through crowdfunding offerings in a 12-month period. As an investor, you browse the available companies, read their pitch, examine their financials, and decide if you want to buy shares. For non-accredited investors like most of us, there are limits on how much you can invest based on your income and net worth, but these limits are pretty reasonable. Let me tell you why Blackout Coffee caught my attention. This isn't some pie-in-the-sky startup. They've already sold over $4.5 million worth of coffee and shipped out more than 100,000 orders. In April 2023 alone, they more than tripled their sales revenue compared to the previous year. They've got a 40% customer retention rate, which is above industry average, and they're the official coffee for Cars and Coffee Palm Beach. Plus, they made the Inc. 5000 list in 2024, ranking number 353 among the fastest growing companies in America. Most importantly for me, they're not trying to be everything to everyone. They know their audience, military, first responders, and people who appreciate traditional American values. That's a focused brand with a passionate customer base, exactly the kind of thing that can build into something significant. So, who might want to use StartEngine? First, people who want to diversify beyond traditional stocks and bonds. Equity crowdfunding returns can be well into the double digits, although they do come with some higher risks. Second, people who want to support entrepreneurs and innovation. If you believe in American entrepreneurship and want to actually participate in it rather than just cheer it on from the sidelines, this is your shot. Third, people who are willing to take calculated risks with money they can afford to lose. And I emphasize that last part. This is not money you need for rent or groceries. This is completely different from buying stocks on the NYSE or NASDAQ. When you buy Apple stock, you're buying shares in a massive, established company with quarterly earnings and daily price movements. Public stocks offer liquidity. You can buy and sell anytime during market hours. Equity crowdfunding is the opposite. Securities purchased through crowdfunding generally cannot be resold for 1 year. You're investing in private companies that might not have profits yet, might fail entirely, or might become the next big thing. Equity crowdfunding is classified as a long-term investment where you may not receive a return for 3 to 5 years or even longer. It's more like venture capital, but for regular people. Let's talk about the advantages. First, you get access to investment opportunities that were previously reserved for the wealthy. Equity crowdfunding breaks down barriers that traditionally limited private company investing to the well-connected and the ultra. Second, you can start small. I put in $500. That's less than many people spend on coffee in a few months. You're not writing $50,000 checks like traditional angel investors. Third, you're supporting innovation and entrepreneurship directly. Instead of just buying shares in Google or Microsoft, companies that don't really need your money, you're helping fund the next generation of American businesses. Fourth, the potential returns can be significantly higher than traditional stocks, though with proportionally higher risks. But let's be brutally honest about the downsides. Most startups fail. More than half of your crowdfunding deals will probably go south. I could lose my entire $500 investment in Blackout Coffee if the company fails. Crowdfunding investments carry liquidity risks. This isn't day trading. This is buy and hold and pray investing. There's also fraud risk. Fraudsters may use asymmetric information and regulatory loopholes to deceive investors, though platforms like StartEngine work to verify company information. So, is this legitimate? Absolutely. Regulation crowdfunding is part of the Jobs Act that President Obama signed in 2012, though it didn't go live until 2016. FINRA oversees and examines crowdfunding portals to ensure compliance with federal securities laws. Companies must provide detailed disclosures, including business descriptions, financial condition, management information, and investment risks. This isn't the Wild West, it's regulated investing. If you're going to do this, be smart about it. Research suggests you need at least 20 crowdfunding deals to balance risk and achieve average returns. So don't put all your money into one company. Treat this like a separate asset class. Maybe allocate 5 to 10% of your investment portfolio to equity crowdfunding if you're feeling adventurous, but keep the majority of your money in traditional diversified investments. For me, this $500 investment represents money I can lose without losing sleep. It's not my retirement fund or emergency savings. It's my let's see if I can participate in the American Entrepreneurial Spirit Fund. I genuinely believe Blackout Coffee has potential. They make excellent coffee. They have a clear brand identity. They're growing rapidly and they're targeting a specific market segment. Could they become the next big coffee brand? Maybe. Could they fail spectacularly? Also maybe. But for $500, I get to find out. And if they succeed, whether through an IPO, acquisition, or just becoming a profitable dividend-paying company, I'll own a tiny piece of that success. If they fail, I'm out $500 and I've got a story. Here's what's really exciting about platforms like StartEngine. This could fundamentally change how businesses get funded and how wealth gets built in America. Instead of only the rich getting richer from early-stage investments, platforms like StartEngine let the middle class participate in funding innovation. I'll be honest, there's something satisfying about drinking Blackout Coffee, knowing I own a piece of the company. It's a small piece, sure, but it's mine. And when I see their growth announcements or new product launches, I'm not just a customer cheering from the sidelines, I'm an owner, even though I'm a very, very tiny one. And maybe that's the real value here. It's not just about the potential financial returns, it's about being part of something bigger than yourself, supporting entrepreneurs who are building something meaningful. So what happens if Blackout Coffee actually becomes successful? What would that mean for my $500 investment? There are several potential scenarios. First, they could go public through an IPO, and if that happens, my shares would convert to publicly tradable stock, and I could sell them on the regular stock market. Think about what happened with companies like Beyond Meat or Airbnb. Early investors made multiples of their investment when those companies went public. Second, they could be acquired by a larger company. Maybe Nestle or Jab Holdings decides they want to buy Blackout Coffee's brand and customer base. In that case, I'd get cash or stock in the acquiring company based on my ownership percentage. Third, they could become profitable and start paying dividends. As a shareholder, I'd receive quarterly or annual dividend payments proportional to my ownership. Fourth, the company might offer to buy back shares from early investors at higher valuation as they grow. This is less common, but it does happen. Now, do I get a discount on coffee? Well, that would be nice, but it's not guaranteed. Some companies offer investor perks. Republic, another crowdfunding platform, gives investors access to exclusive products and discounts, but it varies by company and isn't part of the standard investment terms. Here's the math that gets interesting. I own common stock, so if Blackout Coffee's valuation increases, my shares increase proportionally. If they grow from their current valuation to, say, $100 million, and I own a tiny fraction of the company, that fraction becomes worth more. Let's say, hypothetically, they become as successful as Black Rifle Coffee Company, which went public with a valuation over $1 billion. Even a small ownership stake could multiply significantly. Of course, that's a big if. Most companies don't reach those heights. The key is that as a common stockholder, I participate in the upside if the company succeeds, but I'm also last in line if things go poorly. If you're interested in trying equity crowdfunding, start small. Don't bet the farm on any single investment. Do your homework, read the financial documents, understand the business model, research the management team. Remember, this is expected to be a growing market, with the global crowdfunding market jumping from $1.25 billion in 2022 to $3.62 billion by 2023. But growth doesn't guarantee individual success. Look, I'm not here to sell you on StartEngine or equity crowdfunding. This isn't for everyone. If you need guaranteed returns or can't handle the thought of losing your investment, stick to index funds or CDs. But if you've got some risk tolerance, believe in American entrepreneurship, and want to participate in funding the next generation of businesses, this might be worth exploring. 6 months ago, I was just another coffee drinker buying beans from a company I believed in. Today, I'm a shareholder in that company with a real stake in their success or failure. Will Blackout Coffee become the next big coffee success story? I have absolutely no idea. The bigger lesson is this: opportunities exist if you're willing to look for them and take calculated risks. Sometimes the best investments aren't on the stock market. They're in the garage next door or the coffee roaster in Florida. Just make sure you can afford to lose whatever you invest, because while the upside can be exciting, the downside is very real. Now, if you'll excuse me, I'm going to go make myself a cup of coffee from the company that I actually own. Small part.